If you have ever had a cash register drawer that you've been responsible for, you know that the most important thing is, of course, at the end of the day, you want it to balance, right? Let's say you started out with $200 in that change fund, okay? I think this chapter talks about establishing a change fund. That's going to be similar to what we just talked about petty cash. You've got your cash here. When you establish your change fund, this is the amount of money that's in your register. You're actually, let's say I'm going to establish it for, this is also an asset. I'm going to establish it for $200. I'm going to write a check for $200, cash it, and put it in my change fund. Well, you don't really have to go through the process of writing the check, do you? But you have to move the money over into your change fund. That's how you establish it. Once you've established it, that's all you have to do. There will always be $200 in your drawer. So let's say now you have the drawer and it is going to have $200 in it when you first start the day. Well, here's my tape, my cash register tape for the day. Does that look kind of like a tape? Kind of like a snake, but it's a tape. My cash register drawer then at the end of the day shows that I made $961 in sales. I would have an asset account over here called cash, and I would have a revenue. You want to see that on one thing? Where's my revenue sit? Right here? Mm-hmm. So I've got my sales. Those are the two accounts that would be affected because I made cash sales for the day, because that's what my cash register tape is showing. And the dollar amount that this would it be 961, 200, or what? Would it be 1161? Which one would it be? This is the amount my cash register tape shows that I sold for the day. Okay. So my sales for that day are 961. Does everybody agree? And I count my cash drawer. I come up with, I hope I come up with this amount, right? Because I started with 200, but how much is new money? Because the 200 was in there before the day began. Yes, I'm counting 1161, but I had 200 before I started. What if I started with 200, my cash register tape shows 961, which means that this is the amount I should have, right? But instead, I counted up and I only have $3 short. I'm $1 short. Okay, so here's how you report it. First of all, break it down just one piece at a time. How much were my sales for the day? 961. So I know that's going to be 961. Everybody agree with that? How much cash did I take in for the day? 960. I'm going to draw it right here. It's a brand new account. And we're going to call it cash, short, and over. And this is, you don't really know if you're going to be short or if you're going to be over. Or if you're going to be perfect, right? So we're going to sit it kind of on the fence here. Notice that I wrote it here and the over is over here by the revenue. That's kind of the plus side of things. And the short is over here kind of where we've been writing expenses underneath our owner's equity umbrella. Now we said we were short $1, right? So I'm going to put $1 here. Now once I did that, how much do I have? A 960 debit. A $1 debit equals 961, which equals a credit for 961. Okay. So if I'm going to write this in my, if you'll do it on paper, this will make it a lot easier for you. I'm going to start it, I write my debits first, correct? So on this example. But I have a debit, and I'm going to start my debit with cash. And how much was my cash? It was 960. I'm going to put this next one, cash, nothing to do with the $200 that was already in there, right? 1160 and 1161 is nowhere to be found, even though that's how much I counted in my drawer. The 200 of that I started with before the day began. Now, does this 960 equal this 961? The answer is no. So that is the easiest way to find out which side that's going on. If you'll put that one in the middle, and then you can compare these two, then you know exactly where to put it. Now you have two debits that equal this one credit. Simple? Okay. What if we have this example? What if our example is, we start with 200 again. We're supposed to have sales of 961 again, but this time, oh, and by the way, if I counted that, how much should I have had in my drawer? Everybody agree with that? Mm-hmm. This time when I counted it, I had 1171.
Over $10.
I'm over by 10. Is that right? So I'm not writing 1171 anywhere up here. I'm not writing 1161 anywhere up here. Instead, I know it's going to be these three things. So I'm going to start here with cash, short and over, and my sales. Now, how much did I make in sales? What does my register say? 961. So I know my sales are 961. How much did I take in? I can't say 1171 because remember I started with 200
took out
already.
971.
So I only took in 971, but that's the amount of cash that I took in. So, what's my cash? 971. Now, does 971 debit equal a 961 credit?
Nope, so you put $10
I have
on
$10
credit.
difference. Which side is it going to go on?
Credit.
On the credit side.
Yay.
And that is an example of a short or an over. It's an over, isn't it? Because I had $10 too much. Simple? Okay. Now, when you finish the month, and you're making each one of these, you're going to be posting it to your ledger account. You're going to post cash, you're going to post the short and over, you're going to post the sales, you're going to post each line of this just like you would normally, right, from your journal over to your ledger. But let's take a little closer look at that cash, short, and over, and I'm going to rewrite it here. In this particular example, can y'all see it okay? In this particular example, I had $1 here, and I had $10 there, right?
Mm-hmm.
Well, and I'm going to pretend that the month has continued on. And I was short 2, and then I was short 1, and then I was over 1. Okay, the end of the month has arrived. What is the balance of this account? And of course, this is like a ledger, where I have a running balance going on. But the running balance is going to be flip-flopping backwards and forwards. If you look at this, if this is my running balance of this, here's my debit and credit, here's my debit and credit. Let's start it out. The first one, what's my balance? A $1 debit? Then I put in a $10 credit. What's my balance?
$9.
I had a $1 debit, now I have a $10 credit. What's my balance? $9 what?
Credit.
Credit. Does everybody see how that happened? It's going to be weird. It's your only weird account that the balance is going to be bopping back and forth. What about the next one? I was short $2.
$11
So
debit.
right now, what's it going to be? This is a credit. This is a debit. Debits and credits are always going to be opposite. So the difference is 7, and it's going to be on the credit side. Everybody agree with that? And what about this next one? It's $1.
6.
What's it going to be? I'm still over by 6. What's the next one going to be?
7.
Back to 7 for my running balance. You see how it's going to kind of bop around a little bit? You just have to think about, how you're more and then you're a little bit less, and maybe more and maybe less. You never know where it's going to end. But this guy is over at the end of the month. When he combined all of his days together, he ended up as a total cumulative, he was over $7 at the end of the thing. Well, actually, that $7, when you do your income statement, it's gonna have to be up there in the revenue. You're gonna have to show it as money's coming in. You have $7 more that you have to account for. Whereas if the balance had been over here on this short side, like an expense side, it would be listed down, that cash short and over would have to be actually counted as an expense. Companies don't want either one of these to happen, really. Right. Because on one side it's shorting them, on the other side it's shorting their customers. Now, the one thing I wanted to tell you about your working papers is, in your working papers you have a journal like this, and you know that you're going to post every line over to a ledger account, right? You're going to have cash that you'll be posting to. You're going to have sales or whatever, service fees or delivery fees, whatever that revenue account is, you're going to have that you're posting to. And then you're also going to have this new one called cash short and over. But for some reason, in your Cengage now and also in your working papers, it only gives this one account because it's only wanting you to practice just this one account. So when you get to the bottom of this and you're like, wait, what is this? I'm supposed to post everything over to all of these accounts. Actually, you only have to practice posting your cash short and over one,
So
okay?
that's the only thing.
It's the only one that's posting in your homework. In real life, you're posting to, every line is posting over to a ledger account, right? But they're saying at this point you have down pat. You know how to post to cash, you know how to post to sales. We've practiced that over and over. This is the one that's weird, sort of. It's the one that's new to you. So this is the one that they're practicing with. So that was Jane's question a little bit earlier today is, where's my other accounts? And I just wanted to cover that with you so you wouldn't be looking for those in your working papers. And I think that this is also the only one showing up. Now, and there will be one question at the end. When you come up with your running balance, it's going to say, what is this? Is this a revenue or is this an expense? And it's going to be contingent upon what the balance is for this, you see, as to which one it's going to be, whether you're over or you're short. And that is chapter 7.